There was a time years ago when the only people able to trade actively in the stock market were those working for large financial institutions, brokerages, and trading houses. However, over the past 25 years, developments such as the growth of discount brokerages and online trading, coupled with instantaneous disseminations of news worldwide and very low commissions, have leveled the playing, or should we say, trading field. In recent years, the popularity of trading platforms like Robinhood and 0% commissions have made it easier than ever for retail investors to attempt to trade like the pros. If you are interested to open an account with Robinhood, I'm going to give link below. You can get up to the $200 free stock after join it. Day trading can still be a lucrative career as long as you do it properly. But it can also be a little challenging for novices, especially those who aren't fully prepared with a well-planned strategy. Even the most seasoned day traders can hit rough patches and experience losses. In this video, I'm going to tell what exactly is day trading and how does it work. Day trading usually refers to the practice of purchasing and selling a security within a single trading day. It can occur in any marketplace, but it's most common in the foreign exchange, forex, and stock markets. Day traders are typically well educated and well funded. They use high amounts of leverage and short-term trading strategy to capitalize on some small price movements that occurs in highly liquid stocks or currencies. Day traders are attuned to events that cause short-term market moves. Trading based on the news is a popular technique. Scheduled announcements such as economic statistics, corporate earnings, or interest rates are subject to market expectations and market psychology. Market reacts once those expectations are not met or are exceeded, usually with sudden significant moves, which can greatly benefit day traders. Day traders use numerous intraday strategies. These strategies, like scalping, this strategy attempts to make numerous small profits or small price changes throughout the day. Range trading, this strategy primarily uses supports and resistance levels to determine buy and sell decisions. News-based trading, this strategy typically seizes trading opportunities from the heightened volatility around news events. High-frequency trading, STF. These strategies use sophisticated algorithms to exploit a small or short-term market inefficiencies. Here are some controversial practices. The profit potentials of day trading is an oft-debated topic on Wall Street. Internet day trading scams have lured amateurs by promising enormous returns in a short period of time. Unfortunately, the idea that this kind of trading is some kind of get-rich-quick schemes persist. Some people day trades without sufficient knowledge, but there are day traders who make a successful living despite or perhaps because of the risk. Many professional money managers and financial advisors shy away from day trading. They argue that in most cases the reward does not justify the risk. Conversely, those who do day trades insist that there are profits to be made. Day trading's profitability is possible, but the success rate is inherently lower because it is inherently risky and requires considerable skill. Moreover, economists and financial practitioners alike argue that over long durations, active trading strategies tends to underperform a more basic passive indexes strategy, especially after fees and taxes are taken into account. Day trading is not for everyone and involves significant risk. Moreover, it requires an in-depth understanding of how the markets work and various strategies for profiting in the short terms. Though the success stories of those who stuck it rich as a day traders often get a lot of media attention, remember that this is not the case for most day traders. Many will fizzle out and many will just barely stay afloat. Furthermore, don't underestimate the role that luck and good timing play. Though skills is certainly an element, a stroke of bad luck can sink even the most experienced day traders. Characteristic of the day traders. Professional day traders, those who trade for a living rather than as a hobby, are typically well established in the field. They usually have in-depth knowledge of the marketplace too. Here are some of the prerequisites required to be a successful day trader. Knowledge and experience in the marketplace. Individuals who attempt to day trade without an understanding of market fundamentals often lose money. Technical analysis and chart readings are both good skills for a day trader to have, but without a more in-depth understanding of the market and its unique risk, charts may prove deceiving. Do your due diligence and understand the particular ins and outs of the products you trade. Sufficient capitals. Day traders use only risk capitals they can afford to lose. This not only protects them from financial ruin, but also helps eliminate emotions from their tradings. A large amount of capital is often necessary to capitalize effectively on intraday price movements. Having access to adequate capital is very important because most day tradings employ a high degree of leverage in its margin accounts, and volatile market swings can trigger big margin calls on short notice. Strategy. A trader needs and edged over the rest of the market. Day traders use several different strategies, including swing tradings, arbitrage, and trading news. They refine these strategies until they produce consistent profits and effectively limit losses. A profitable strategy